What is up, my Forex for Beginners family? Okay, today we are looking at the exponential moving average. This is a very interesting topic. It's one of my favorite. The moving average actually helps you a lot in trading if used properly, and so the goal of this lesson is to teach you how I use the exponential moving average. Excuse me. Okay, so I'm going to read a definition to you right now. What is a moving average? A moving average is a widely used indicator in technical analysis that helps smooth out price action by filtering out noise from random short-term price fluctuations. That's the reason why we look at the higher time frame, because we don't care about the short-term price fluctuations. But anyways, continuing. It's a trend following or lagging indicator because it's based on past price movements. Listen to this carefully. There are two basic and commonly used moving averages are the simple moving average, SMA, which is simple average of securities over a defined number of time periods, and the exponential moving average, which gives greater weight to recent price movement. So what does all that mean? So basically, a moving average is just an average of past price movements, and they divide it by how many periods there are, and then you get an average. So, you know, similar to like when you take an exam, say you get, 7 out of 10, you divide 10 divided by 7 and you get an average. So it's basically the same thing, but what they do, they graph it on a chart. So right here, this red moving average here is, let me double click on it. It is the EMA 18. So exponential moving average with the period or length of 18. So what I want you to do right now is take a picture of this or write it down, or you can just watch this video once and then go through it a second time. But this is the settings. I need you to enter these settings. So I want you just to take a picture of this right now, and then style you can set to red. You want to set the style to red, and just make sure this is checked, and this can just stay default. But the main thing we want to make sure is says 18, close 0, and then go back to style. I just changed the color, and make sure this is checked, moving average, and hit OK. And then I want you to make a note of this. This is the EMA 8, close 0, and that's it. And then click back on style, make sure this is checked. This, we're going to color it blue, so you can just pick this blue and leave this saying default. Just again, make sure this says 8, close 0. Okay, so how do we, so now that you have these settings, I'm going to show you how to add it. So we're going to go up here where it says indicator. We're going to click it. We're going to click here with our mouse, and we're going to type in moving, M-O-V-I-N-G, moving. And what we see here is it says moving average exponential. Make sure you don't select moving average. We want to select moving average exponential. You can click here too to favorite it, and then later on, if you want to add more moving averages, you just come to your favorites. You don't have to search, just come to the favorites. So in order to favorite this, just make sure you click like that. See how I just clicked it? It's not favorited. Favorite that one, and you can leave this one unfit. Don't favorite this one. We're only going to study the moving average, exponential moving average. So once you favored it, you can just click on this guy right here. So I'm going to be clicking my left mouse button, and what it does is it'll add, see right here, it actually added this blue line right here. So when I clicked on this once, it added a blue line. Okay, so then we're just going to hit X, and then pretend you don't see this. I'm actually going to hide these. 1 second. If you ever want to hide moving averages or what's on your chart, you just come and click here. It shows you what's on your chart, because you want to keep your charts nice and clean. So you, whatever I'm not using or looking at, I can just hide them. Okay, so back to this. So again, I'll just go over it again. Indicator, we typed in moving, M-O-V-I-N-G. We look for moving average exponential, and we checked right here to start it. So next time we can just come back to favorites, and we're gonna, when we clicked here, we're gonna click with our left mouse button, and it will add some sort of line here. See this blue line? I'm not sure what your default will be, but you'll have one of these added, and then just hit the X. And now we're going to double click on that again. So with our left mouse button, so we're going to move our mouse right here, and we're going to double click with our left mouse button, and it brings up this. Make sure it says EMA. If it says MA, then you've installed the wrong indicator. If you want to delete an indicator, you just come up here and hit this X. Hit this X, and you can also hide it. So see how I'm hiding the blue line right now? So you can hide it, and if you want to delete it, just hit the X. But go back up here, click your left mouse button and remove that and just hide it. Okay, so back here. So we're gonna double click on this blue line, double click, and we're going to adjust these numbers here. So before, hold on, let me bring up that. Let's start with the 8. So the EMA 8. So hold on 1 second. I'm going to double click this. This is going to be our setting. We're going to set it to blue and 8. Close 0. So what I want you to do is just input this and this. So you can take a picture again if you haven't. Take a picture of this. And now take a picture of this. And now I want you to double click on your blue line. And then here, I want you to edit this to show what we just took. So edit all of this and edit all of, go back to inputs. I believe it was 8, close 0, but basically I want you to enter this information. Once you've completed that, just hit OK. And now you should see, I'm just going to delete this one. You should see this blue line. So that's what we accomplished right now. So we should have EMA and style, color, and this is what it's going to show us. Now, step 2. We're going to add the same indicator. So you can go moving or go to favorites, whatever you want. I want you to click on it. And this time you could see it added this orange line for some reason. Let's change that to, it's going to be red. So again, hold on, let me hide that 1 second. So we are adding now the 18, the EMA 18. So I want you to double click on this line that you have, and input these settings right here. So I want you to enter this. So select, make sure that's selected, select this color, some sort of red. It should be red. So have red and blue, and the input is 18, close 0. Again, style. Oh yeah, when for both of these lines, I want you to make sure when you click on this, make sure you select this second thickness. This adjusts the thickness. You don't want it too thick or too thin. You want it right here. That's just right. So now you should have 2 indicators on your chart. I'm just gonna add my 18, 1 second. There, oh no, the 8, okay. So we should now have these 2 indicators on our chart. Give me a second, I'm just gonna have a sip of water. Okay, I'm back. So what are these indicators telling us? Okay, so like in the previous chapter, I want us working on AUD, USD. This is the pair that we're going to master. If you guys are new to trading, that's great. People that have already traded in the past, I need you to do one thing. I need you to forget everything you've learned. Don't forget everything you learned, but forget your old ways. We're starting a new way. We're starting a new way to trade. We're going to follow rules. We're going to not chase money. We're going to seek knowledge. And eventually the money will come. But first we must learn how to use these tools all together. And TradingView is the perfect software. If you want to be a trader, you need TradingView. I have a link below. My students get around a 50% discount. Use the link. Anyways, so let's get back to the exponential moving average. So we've added it to our chart. I want you to go make sure you're on AUD USD. If you're not there, just type in AUD USD and select FXCM. Okay, so now what I want you to do is also go to your 8-hour chart. So if you click on here, if you don't have the 8-hour chart, click on our 8-hour time chart, click on this little arrow here and go and favorite 8-hour. It should show up here, or you can click on 8-hour here, but we already have it favorited. And we're going to work on the 8-hour time frame today. So what does that mean? 8-hour time frame. Each one of these bars, I'm just going to review. Each one of these bars represents 8 hours, and over here is where price. This column here is the price, and this bottom column is time period. Date. So date and time. Date and time versus price, and that price has to do with how much Australian versus USD. So it's 2 currencies and what they're worth. So this is, anyways, back to here. So each one of these bars is 8 hours of price movement. So as you see, price is falling. Every 8 hours, a new bar is formed. So I want you to notice that this cross here, the 8 and 18 cross. So we're going to be, with this moving average, we're going to be looking for a cross. The cross is not I don't want you to look at these indicators as something that's telling you what to do. All this is showing you graphically is that the trend is changing. What we learned from previous chapters, price action is always, hold on, I'm going to make sure my magnet is off. Oh yeah, so I was going to tell you about this tool. So magnet, sometimes we want to have magnet on and we have it set to weak magnet. What that does is when you move this, see when I'm moving this, it snaps to each one of these. So it just makes, when you're trying to draw something with accuracy, it just snaps it to, as like it jumps. That's what I mean by stamp, it jumps. But sometimes you don't want it to do that, so you just turn off magnet. Make sure you have it on weak if you're using it, but if you turn it off, it's not blue. Then you can move this like anywhere in between. It just more free moving. Anyway, so the market here is making a higher high, then a higher low. We're always looking for structure. Higher high, higher low. So what are we expecting now? We're expecting it to make a higher high, but price doesn't have to do anything that we want it to do. It can do whatever it wants. What I want you to also notice is that we are now at a monthly level. See this? Monthly. In the previous chapters, we've already talked about how to find your monthly levels. So I have this nicely labeled. And now when price approaches a monthly level, look what happens. Look what happens. It starts to go down. Is that surprising? No. Because we have our monthly level marked, we were aware that price most likely would get rejected. It could have came across, came back here, retested, and continued up. It could have. But all we knew was that price was approaching a monthly level and something is going to happen. Either price is going to stay around this area and decide later, or it's just going to reverse. This time it reversed pretty fast. And so this is market structure. I'm just going to draw quickly a trend line. And 1 second. I'm going to delete this. So we're moving up. We're making, should I label this for you? Hold on a second. I want you to do this too. Label it because it's going to help you remember. Trading is about putting everything we've learned together, and when we have multiple factors in the same direction, if we have a bunch of things telling us that the price may move up, it's called confluence. So we're always looking for multiple reasons to buy or sell. Okay, so I'm going to just label this as higher high. 1 second. So when I click this, I'm actually on my keyboard going Control C for copy and then Control V for paste. And you can, and then I'm going to double click this and change the label to from a higher high to a lower high. Copy. Actually, sorry. So I just paste it again, copy and paste. This is a higher high. And this is a lower low, hold on. So this is a lower high. Okay, so right now we can see that, hey, or about my trend line. So just to review the trend line, I drew my trend line from this wick and touched this wick. So what we do is don't look over here. Look at, even though I'm moving my mouse to the right, my eyes are looking right here. So what I want to do is touch the end of that wick and line this up with the end of this wick right here. So I'm gonna push it into the, I call it pushing it into the future. So I'm not looking here at all. I was looking right here. Just touched it on that wick. And then look at this. without even, all I did was look at this point and this point. And look at this, look, see how it tapped right there? How did that happen? This happens all the time, see that? That proves that this is a valid trend line. So we're just gonna draw our trend line because, again, we're looking for confluence. So here we see it bouncing off a trend line. So it's bouncing off a trend line. We see it approaching a monthly level. This is our monthly, approaching our monthly level. And then we notice price starts to fall from there. And then we're coming into how to use the moving average or exponential moving average. So now, after examining what's happening, the moving average tells us that the trend is changing. But because we already studied the market structure, we studied that is making a lower low or lower high, higher high, lower high, higher high. We approached a monthly level. We're expecting it to possibly drop back down or go up. So what do? We're expecting something to happen here. And then what does the moving average tell us? This confirms that the trend has changed. Here, actually, let me show you the break of structure. When a trend changes, like I taught in previous chapter, when a trend changes, there's a break of structure happening. BOS, break of structure. So let's examine where this break of structure happened. So we're making a lower high, a higher high. So this would be actually our, let me copy this 1 second. This is our next lower high. So let me delete all these so we can really focus on my point. So, okay, 1 second. So here we're looking for where the break of structure happens. So we went from a higher high to a lower high. We're expecting it to make a higher high, but it doesn't. It made this little high, and then it retraced 100% and closed right here. So this body actually engulfed this body. We haven't studied this yet. This is the next chapter. I'm going to talk about candlesticks, but this is one thing I always look for. This is called bearish engulfing. It could also happen when it's going upwards. It's called bullish or bearish and bullish engulfing. So this is bearish. Bearish means sell or going down. Bull or bullish means going up. So this is a bearish engulfing. That means this body, see this body of this candle, it engulfs this one. That means this body is smaller than this body. That means this is a more powerful downward move. So this is actually where break of structure happens, because we were expecting a, 1 second here, we were expecting a higher high, but that didn't happen. It got smashed down, bearish engulfing, and this is an indication that the trend is changing. We also broke our trend line. Let me delete some of these. So one indication was rejected off the monthly. Here we're breaking structure. And the third point is our trend line. See this trend line? See how it touched here? It touched here. It touched this candle right here. And now this candle right here actually broke the trend line. Do you see that? Do you see how this bearish engulfing candle also broke this trend line. So that's another reason why we think that price is going to continue downwards. And then we use the exponential moving average. We note that the trend has confirmed, changed, because now the moving averages are also telling us that when they cross over. And that's why we have this red line on top. When red I always use as negative, or it's downwards, and blue I always use as upwards. So you can see when price is over here, I'm looking, 1 second. When price is moving up, the blue is on top. See that? The blue line. When price is going down, see now it crosses over and the red is on top. So basically this is how we use the exponential moving average. It shows us when there's a change in trend direction. So what we're going to do now is we're going to just sit back. We're on the 8-hour chart. We're just going to look back in the past and see what the moving average told us. So here you can see crossover and sharp downward movement all the way down to here. That was a good indication. Right here we can see crossover, EMA 8 and 18, and what happened? Price went all the way up to here. Let's go back and continue looking. Oh yeah, one thing I wanted to teach you is one of my students asked, I have a wheel, see this movement I'm making right now? I have a wheel mouse. And if you want to move the vertical axis, you're gonna use your mouse button with the left mouse button, click and hold, and you can scroll up and down. Just reviewing this with you here. And then if you want to move left and right, you just hold your mouse button and move left and right. But in order to move this chart freely like I am right now, you always have to adjust this column first a little bit. So adjust this first, and then this will be free moving. But one of my students asked, how do you move, do this? See how I guess I'm shrinking it horizontally? Well, if I'm using a wheel mouse, like I have a little wheel on my mouse. If you don't have a wheel mouse, you move your cursor right here, see this? You can do the same thing a wheel mouse does by going minus and plus. So if you want to adjust your chart like that, sorry, hold on, let me adjust it like this, and then adjust the horizontal axis, and then move the chart around. This is why TradingView is great. I love it. If you want to be a trader, you need TradingView. Okay, so let's continue looking for crossovers. So here you can see price failed to stay above the monthly level. We had a crossover and price dropped down. You can see here crossover, price accelerated to this monthly level. Do you see how the EMAs show you nicely? It graphs it that trend is changing. Crossover, price decreased all the way, actually all the way to here. Here's the oh shoots, hold on, mess that up a little bit, 1 second. So price decreased from here and came down all the way to this wick. This is the reason, I'll talk about a wick for a second. This is not usual. As traders, we don't like to see long wicks. This just means price dropped down and then came back up. That's actually a shooting star. I'm going to talk about that candlesticks in our next chapter. But things with a long wick like this means price is changing and it's probably going to change directions. But anyways, back to here, we had a crossover, price decreased all the way down here. Let's keep looking. Okay, yeah, so you get the hang of this. So what I want you to do here, crossover, price went up. So what I want you to do is just on your chart, start looking for this. Look for the crossover. This is just one more way to confirm your analysis. And right here was a great example. I didn't even plan this. I just started looking at this this pair, Australian dollar versus US dollar, just for you guys. I like to trade Bitcoin, but Bitcoin, I don't suggest any of you guys to trade it because it's got what we call a higher spread. So what the broker makes, it's a little more risky and you have to have a larger balance. But like I said, right now, you're learning how to trade. And the way to trade is to learn without being removing fear and greed. Those are the two things that will hold you back. Remove fear and greed by not chasing money, by taking small trades, which will enable you to learn the skill first. And that's what I need you to do. Treat your demo account like it's a real account. If you're going to start with $300, I want you in your own account. I want you to start a demo account with $300. And you might be saying, well, the demo account is too large, or is 3,000. I think the lowest amount you can get for demo is 3,000. What I'd suggest for you guys to do is open some large trades. So maybe open a one lot trade and buy or sell, it doesn't matter. Just open it and close it, the trade, and you'll see in your history that you'll be negative like $300-400. I don't know how much it is. Just keep opening and closing trades, and this will also teach you how quickly you can lose money if you don't know what you're doing. So try to just take some bad trades on your demo account just to get the account balance down to either 1,000 or 500 or 300. You want your demo account to have the same amount of funds or same amount of money that you're going to use in your live account, because you're going to learn a lot of things when you treat your demo exactly like your live account, because you need to use proper risk management. And I'm going to talk about that in another chapter, but I'm going to review all the things that you need to your mindset. I'm going to have a chapter about mindset, but I need you to chase knowledge, not money. And the only way we can do that is by removing greed and fear. And the fear is your stop loss. If you trade large lots or large trades, your stop loss is going to get hit. You're going to lose money and you're going to get discouraged, and then you're always going to fear, oh, is my stop loss going to get hit? Well, if you took small trades, and you want to take trades so small that you don't worry about your stop loss being hit. All we care about is experimenting. This is an experiment, and it's going to teach you. I only want you to take trades that are 0.01 lots. So you're always going to trade right now 0.01 lots. And if you're not sure what I'm talking about, just go back to the MT4 review on how to place trades. But so by taking small trades, you're not going to worry about your stop loss being hit. You're going to be more interested in knowing was my analysis correct? Was I correct, or did my stop loss get hit? But if you're worried about your stop loss, you will never learn how to trade. You will never learn. Once you learn how to trade, you're going to make an endless supply of money. No other field or no other trade could you learn how to take a small account and make it into an account that provides you money for the rest of your life. The goal of my training for you guys is to do one thing. I want you to be able to take, say, a $100 account or a $50 account and turn it into a $500 account. If you can do that, and if you can learn the proper skills and not to chase money, if you're able to turn a $100 account or a $50 account into 500, you will have an endless supply of money. Thanks for watching. Our family is growing tremendously, and I'm very proud of our group. Forex family for life. Thanks for watching.